Okay, so we are to record the following transactions in the appropriate journals and also post to the ledgers. So I think it is a straightforward thing. So the first transaction was sold goods to Kwame. Sold goods to Kwame. So this is a credit sale. Now I tell students that your sales could be credit or cash. But if you are given a statement like this, sold goods to Kwame, without an indication that you took cash or check, then that is a credit sale. So this first transaction will go into our sales day book. So as we have on our right hand side here, our sales day book, we put in the date 1st January. The currency is dollars. So let me put the currencies there. Okay, so 1st January 2008. Kwame will be the particulars. We don't have to do any calculation, so we'll skip the detail column and put the amount there, as simple as that. And I think all of you had this correct. So that was nice. Then the second one was 5th January, purchase goods on credit from AAK. So that is purchases, so go into the purchase day book. So 5th January 2008, AAK Limited. There's no calculation bit here, so we put it there 600. And we are good to go. 10th January, sold goods on credit to Amina, so another credit sale. So we go into the sales journal. We put down the date 10th January 2008. Amina, no calculation, $200. The next one is return goods to AAK. Or have I skipped? Yes, sorry, 15th January. Amina returned goods worth 200. So Amina is somebody we sold goods to and she has returned. So that's returned inwards. Yeah, Richmond, go ahead with your question.
We sold goods to Amina is 1,200.
Oh, sorry, it's 1,200. Okay. 1,200. Thanks for the prompt. The 200 is the returns. Okay, good. Thank you. So returning was, let me put my currency there, dollars. So returning was on 15th of January 2008. Details will be Amina, and amount is 200. The next one, which was on the 18th, returned goods to AAK. So that was return outwards. So let's do for the return outwards. So 18th January 2008. AAK Limited. $100. Okay. Now on the 19th, an interesting one. Sold goods for cash. Sold goods for cash. Sold goods for cash. I want to mention specific names though, but no, I won't do that. I think one of you put it in the sales journal, and I was wondering, you only put credit sales in the journal, in the sales journal. So if this is cash sales, it can never be in the sales journal. So that was an error. So next time, please don't put your cash sales in the sales journal. Another person attempted to put it in the cash book, but because we have not gone through the cash book, the person was struggling with the format of the cash book. So yes, he got the concept right that he's supposed to put it in the cash book because this is a cash transaction. So it will be in the cash book. But so I was expecting you to ignore this one regarding what we had discussed, because I was only looking out for the sales day book, purchase day book, return invoice, and return outwards. And this particular transaction will be in the cash book. So I was not expecting to see the cash book solely because we have not discussed that. So that is it for the transaction on 19. Okay, then the last one, purchase goods from AAK Limited, 250. So another credit purchases. So we go into our purchases day book. And 22nd January 2008, another AAK Limited, 250. So that was it for the journal. So the only one you were supposed to leave out was the cash sales. It should be in the cash book, which we'll discuss later, how to prepare the cash book. So this is all that I was expecting for the journals. But you need to get your totals so that you can post them to the various ledgers. So for this one, but is there any question before I move on with getting the totals? Any question? I think fairly you did well, except for this 19th January transaction. Okay, so let's move on. So the total here will be 1,500. So we'll use the closing date, 31st January 2008. So total credit sales transfer to sales account in the general ledger. Okay. So we'll do same for purchases 31st January 2008. Total credit purchases transfer purchases account the general ledger. The total is 850. Going to return invoice and return out was 31st January 2008. Total return invoice transfer to return invoice account in the general ledger. Total of 200. And finally, the return out, which also has a total of 100. 31st January 2008. Total return out was transferred to return out was account in the general. Okay, so that will be all for our journals. What is left is posting to the ledgers. Posting to the ledgers. But any question? Let me pause for any question. Please ask questions, so or it's very cheap for you. So we have our sales day book now. where the entries will go into the sales ledger. And in the sales ledger, we are going to open accounts for Kwame and Amina. Okay, so let me open the account for Kwame and one for Amina. So what we do is we debit these debtors. So on the first, your currency should always be your account. If you forget it, you will lose marks. So 1st January 2008, narration will be sales. Amount is 300 for Kwame. In case of Amina, we also have a debit entry on the 10th of January 2008. Narration will be sales. Amount is 1,200. So we have done the individual entries, is left with the totals, which will go into the general ledger. So let me move down into my general ledger. So my general ledger. In my general ledger, I have my sales account. So in my sales account, I'm going to credit it with the total. So let me put my currencies in. Using the closing date, 31st January 2008, and the details will be debtors, a total of 1,500. And we are done with the sales daybook. Then we move on to the purchases daybook. And that one should be in the purchases ledger. So let me create my purchases ledger. And in my purchases ledger, I need to open account for AAK. So only one creditor there for only AAK Limited. And I'm going to debit AAK, but here on 2 different occasions, right? So it's important you deal with them separate. So the first one was on the 5th. On the 5th of January 2000, purchases, that is 600. And then the second one was on the 22nd. $250. So we are done with the individuals, left with the totals. And the totals will go into the general ledger in the purchases account. So I want to believe you are now getting the concept. Is becoming easier and better. So purchases account. And we are going to debit our purchases account with the total using the closing date 31st January 2008. The narration will be creditors, a total of 850. Very simple. Quickly, let's run through the return invoice and return outwards. So fortunately for the return invoice, it will go into the sales ledger because the person is a debtor, right? So Amina. So we go to our sales ledger where we have Amina's account already there. and we are going to credit Amina for that return invoice. So I'll put down the date, 15th January 2008. Narration will be return invoice 200. And then we have to post the total also to the return invoice account in the general ledger. So in my general ledger, I need an account for return invoice. And this time I'm supposed to debit return invoice. Using 31st January 2008, the details will be debtors 200. And then finally, we have the return outwards, which also happens to be just one entry into AAK Limited. So AAK is a creditor who already has an account in our purchases ledger. Oh, I think I turned the entries for AAK earlier, right? We're supposed to credit AAK rather. So let me do that correction. Hey, so none of you realized that mistake. Okay. But when you purchase, you credit the creditor or supplier. Okay, so the return outwards rather will be debited to AAK. So 18 January 2008, return outwards 100. Then we post to the total to return outwards account in the general ledger, and we'll be done with the requirement of the question. So my return outwards account, final account, return out. So we credit return outwards with a total return outwards. Yes. Narration will be creditors. Welcome back, Frank. Good. So this is all that was expected of you. Now, some questions can go ahead to tell you to balance off the account and extract the trial balance, which I believe you can easily do. You balance off with your carry down, brought down for each of. Okay, so this is it for this exercise. Any comment on this exercise before we move on to discuss further issues? Any question? Okay. Now, one other concept I want to introduce is the concept of discount. And if you have been paying attention, you realize that we have not been doing anything in our details column because there's no information that is requiring us to do some calculations under the details column. So if you skim through a question and you see that there's no need for doing some workings, you can ignore the detail column and do your date, particulars, and amount column, just the three. So it's always important to pay attention to the question. So the concept of discount. Now, last time I hinted that discount simply means, when we say discount, it simply means allowance or reduction. So a discount is an allowance or reduction in the price of a good or service. So the price of the bottle of champagne is 50 cedis. You go and the person asks you to pay 45. The person has reduced or given you some allowance, and that is called a discount. In accounting, there are two types of discounts. Two types. Okay. The first one is what we call, okay, let me ask my student, maybe you have read ahead and you know something about it. What are the two types of discounts? Prof. Alexia, any idea?
So,
Yes.
please, trade and cash discount.
Exactly. Thank you very much. So we have the trade discount and we have the cash discount. Thank you very much. Each of them has a reason for its name. So when we talk of the trade discount, this is an allowance or a reduction in the price or it's a reduction in the price given for bulk purchases. For bulk purchases. So when you purchase something, okay, let me add sales, bulk purchases or bulk sales. Sometimes because some people are selling in bulk, they reduce the price. So emphasis is on for bulk purchases. You can even ignore the sales for now, but the party to the exchange really determines whether it is purchases or sales. So for example, and I don't know, maybe you have experienced some of these things. When you buy one of the products, it is 2 cedis. If you buy 3, ordinarily it should be 6 cedis, but they will tell you 3 for 5 cedis. So you have gotten an allowance for buying plenty or for buying in bulk. I don't know if you have experienced this thing now I'm saying. Sometimes you go to a shop, they say, oh, when you buy one, it is 5 cedis. But when you buy 10, so 5 times 10 should be 50, but they will say when you buy 10, 40 cedis. Okay, so they are giving you a reduction because you are buying plenty. So that's the essence of the trade discount. That's because you are buying the thing in bulk or in larger quantities, they give you that reduction. Okay. The cash discount, on the other hand, is a reduction given to enable prompt payment. Prompt payment. Emphasis is on prompt. And this one too, we have a common experience in our daily lives. There are some people, when they come to you, we normally call them the abochi. Yeah, when they come, they say, oh, already cash is 100 cedis, but if you pay later, 150. Okay. So they are giving you a reduction of 50 if you pay promptly or on time, or if you pay quickly. So if you pay today, it's 5 cedis. If you pay tomorrow, it's 10 cedis, right? So if you want to enjoy the reduction, you pay promptly, you pay on time. And that is cash discount. Now, there are also 2 types of cash discount. And these are discount allowed and discount received. But we'll speak about discount allowed and discount received in our discussions on the cash book. But I believe I spoke about this discount allowed and discount received in our previous sessions. Now, the essence of these discounts is to the fact that during the preparation of the day books or the 4-day books we have seen, that's the sales, purchases, return inwards, and return outwards, you have to consider this trade discount. So there are some questions where You see, oh, bought goods on credit from Ama, blah, 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 at a discount of 5 cedis. So that is a trade discount. Okay, trade discounts normally occur when you buy the goods on credit or when there is a credit transaction. But because the person is buying in bulk, we give that person the reduction or allowance. So these trade discounts should be calculated and deducted from whatever amount or price that was given in the question. And that is done at the details column. Okay, all these reduction or deductions will be done at the details column. And I also mentioned that sometimes you would see some, several items, like maybe bought 10 bags of cement, 20 iron rods. So you have to do the calculation for all these items, right? So you do all these things under the details column. Okay. So now I've given you a hint what to do when you see this trade discount. You would reduce or you deduct it from the price, and we'll solve an example together, so don't worry. But one important thing I want you to take note of is, and I want you to read that yourselves in the notes so that at least you would appreciate what I want to communicate to you. Okay, so let me scroll up for that point. And that point is on the trade discount. Okay, so here it is, and I want one of you to read it for me. Yes, who's going to do the reading? Prof. Richmond or Prof. Frank, whoever is ready can read it for me. What I have highlighted here.
It is important to adjust any trade discounts on goods when they are returned inwards or returned outwards.
Okay, so the point I'm trying to make is that if you are solving a question and then whether purchases or sales, there was some discount given. When there is return outwards or return inwards on that particular transaction, you have to consider the discount when you are preparing your return inwards and return outwards account. Let me go to the example we solved so that it will make sense better than this oral kind of. So let's take, for instance, in the example that we solved there, we had a discount given by one of the suppliers. So let me come here. Okay, so purchase goods on credit from AAK Limited 600, and let's say less 5% discount. Normally that's how it is given in the question, less 5% discount, or the invoice was at a discount of 5%. So look at how it was going to be dealt with. In the purchases journal, this is AAK. So this 600 cedis, they are telling us that we should reduce it by a discount of 5%. So we would have written the 600 under the details and then go ahead to say less 5% discount and calculate the 5% on the 600, which is going to give us $30. Okay, then we'll less this $30 from the 600 to give us a net figure of 570. So I believe this makes sense. Okay, now look at something here. Returned goods to AAK 100. So AAK is somebody we purchase from at a discount. So if we are returning goods to AAK, then we have to consider that discount as well. So it means that in your return outwards daybook 2, in the return outwards daybook, you would have considered deducting. So return outwards, let me go there so that. So this return outwards of 100 would have deducted the discount of 5%. And I think 5% of 100 is 5. Okay, so we'd have gotten a net figure of 95. So that is the point I was trying to make, that anytime you are doing a return inwards or return outwards, check if the previous purchases or sales had a discount. It should affect your return outwards or inwards. Okay, so I think this session will end shortly. Let's rejoin and I'll pick a question where we are all going to solve together, where these discount and other workings come to play. So I'll see you in the next session. Thank you.